Hey guys, it's Lucas Sora here with Compass Real Estate in San Francisco. And today I want to chat a little bit about interest rates, how they've affected the markets, how they've affected the real estate market specifically. And I get a lot of questions about this from clients all the time who want to know, like, what are the rates doing? How have they impacted things? And I thought, why not make a video about it? Because I have a bunch of great data and charts to share with all of you. So if you like numbers and you geek out on that kind of stuff, this video is for you. All right. So I want to start off by saying, first and foremost, we've always had our fair share of tech companies in since the dot-com boom here in San Francisco. But the money that's pouring into the AI tech right now is really insane. It's supercharging our resilient comeback, if you will. Last year, they raised nearly 35 billion in venture capital funding, and the change that money brought is very visible. Rents are climbing again, city buses are filling back up again, and the face of San Francisco really is starting to look younger and coming back to what it used to be. Also, too, with commercial leases, those are a much higher number than what they were pre-COVID, which is also huge. As we know, when COVID hit, downtown became a ghost town and it had a really hard time getting back to where it was before. Well, I'm happy to say that we have now surpassed the numbers pre COVID. So that's a huge indication of what's to come. All right, let's jump into some of these graphs. This one's going to be for mortgage interest rates since early 2023. Of course, 2023 is right when we saw things pretty much change overnight with the raise of interest rates, and it really, really shook our markets. So you can see they start to climb right over 7% in 2023, and then by mid 23 fall October, you are approaching over 8%, which was insane. It really shook things. It affected people's affordability so drastically that the market just kind of like went on pause there. The only people who were selling like had to sell, and the only people who were buying had to absolutely buy. And then we see in 2024 September, they come down probably about like maybe a percent, couple percent, if you will. And then as you can see, they go back up again. And then of course, the whole tariff shock hits the financial markets, and that dropped a little bit, did not last long. And then they're back up again and now a little bit down. The biggest thing I want to point out with this is that they have not changed much over the last 2 years, really. You're still in that, I would say, that 7.5% to that 6.5%. And that is not a huge, huge change. Yes, it does have a difference in monthly payment for people who are getting loans, but it's not super massive. So this is kind of the new normal. We probably will come down sub six. In fact, I think there are some products out there sub six right now. But in general, like if you're expecting things to come down to 4 and 3 again, like don't wait. That's a fool's game. That's just that we're not going to see that happen again. All right, so this one's really interesting. I kind of love this one. It shows like the house price trend since 1990. Well, I like this one a lot because it kind of just shows like how resilient and how smart of investment real estate can be. People think they can just buy or sell a house like overnight and make a profit. Real estate really tends to be a long-term game. And if you hold on to it, as you can see here, you're going to make money. You're going to do very well and have quite a bit of equity in your home. As you can see, even when like the Great Recession happened in 28, it definitely dropped. But then it starts to climb back up again, right? And even within the last 3 years, we hit an all-time high of a little over $2 million for the median price, and that was in 2022. Now, keep in mind that was we had sub 3% interest rates. Like money was cheap. It could really stretch out people's affordability and what they could offer in a home, and it just was crazy. The fact that we have more than doubled interest rates since 2022, and the prices have only dropped median by $200,000. That just shows how resilient San Francisco is and how much there is still such a huge supply and demand issue with this city. The fact that the mortgage between a 2.5% and a 6.5% is a 4% difference, that's a big jump in your monthly payment and what you can afford. So the fact that we only dropped down $200,000 in the medium, it's a pretty indication of how strong this market is. This one is really cool. This is going to be the value trend since 2005. You can see there the green is the condos, and then the white line there is the houses. They're pretty much median price per square foot is pretty much always right there on par. Now, keep in mind, single family homes are usually going to be much larger than condos. So therefore, sometimes the price per square foot won't be as high as it would be for a condo. But that's because if you have a condo that is 700 square feet and in a great neighborhood that could go for $1 million, that's going to fluctuate the price per square foot quite a bit on something like that. But in general, the prices are pretty similar. As you can see, that there's definitely more demand for single family homes. That price per square foot is going to be higher than what it is for condos. Again, this is for all of San Francisco. I think it's important to notice, though, if we were to do this based upon neighborhood specific data, the numbers will look much, much more different. And then the last one is going to be the San Francisco condo prices, downtown versus non downtown. I like this a lot because, as we mentioned, and I've mentioned many of times, the downtown market was hit pretty severely with COVID. There was no longer a need to be close to work because people were not going into the office, and therefore that area really suffered quite a bit. So as you can see here, the green is going to be the non-downtown areas, and then the blue is going to be the downtown Soma condo market. So obviously, again, if this were to be neighborhood specific, these numbers would look dramatically different between a Noe Valley and a Soma condo market, right? It would be so different, like night and day difference. But this is still going to be all the neighborhoods overall. And as you can see, there is still a significant difference in the condo prices between downtown and not downtown. I do think, in general, and my projection is that the downtown areas, Soma areas, South Beach areas, those are going to start to go back up again. And they may not become like really value buys pretty soon. And the reason being is, with all the big companies going in downtown, there's going to be a demand again for people wanting to live close to work. A lot of these big AI companies are requiring their people into the office, and those are the ones who are occupying a lot of the new office space that we're seeing being leased up. So if you were thinking about getting a good buy downtown, I think really now is the time to do it, because I can't say in a year from now that there's still going to be a discrepancy in the difference between these average median prices for condos. So something to keep in mind. All right, that is everything. Hopefully you guys find this interesting. I have access to graphs and data like this all the time, so I'm always happy to pull numbers for you and chat about that further. So hopefully this is helpful, and we will chat soon. And for more information, how to get these two, there's going to be a link below as well.